thank you all for staying, and welcome back to join us. This session is all about looking at the impact of big oil and biogas. I think all of you will have seen that BP invested first in Archaea last year. I think that was a deal about $4 billion. Shell subsequently acquired Nature Energy for $2 billion, and most recently Total Energies has acquired the Polish operator, and apologies, my pronunciation is terrible, so I'm not going to even attempt to pronounce the name of it. So big investments happening there, and I think it's very helpful for us to explore how significant that is and what it means for the biogas industry. So I'm delighted to have joined me here Amy Wong, who is head of EMEA Energy Securities Research. Amy, thank you for joining me. Who's been analysing the oil industry and their investments in biogas for quite a while. So, very pleased you're with us.
Thank you, Charlotte.
What do you think is driving the oil industry to make these quite significant strategic moves into the biogas industry?
Thank you very much for that introduction, Charlotte. So I think we actually have to start quite big picture if we think about why the oil and gas industry is looking into such investments into biogas, multi-billion dollars. Maybe to put it into a bit of context for everybody here, what does it mean to be energy research at an investment bank? I'm actually not an engineer by training. I studied as an accountant a few years ago, but been looking at the energy industry for the last 15 years from the perspective of a financial analyst. And I've looked at upstream oil and gas investments, oil service companies, energy service companies, integrated oil companies, or better known as like the oil majors. And they're now all rebranding, and we call them multi-energy or integrated energy companies. And really to pick that apart is because we all know the energy transition is here. And when I look at energy research, I direct our team's efforts into newer energy. So we actually, our capabilities span across old to new energy. So we look at oil markets, gas markets, hydrogen, carbon capture, biofuels, and increasingly biogas. I'd say, it was helpful to see BP, like you say, in your opening remarks, look at Archaea Energy. We saw that they were building some of the capabilities internally, but there was an opportunity to scale up that business by acquiring, a portfolio of producing assets with a large pipeline to develop more, and that was the same rationale for Shell as well. But if you really kind of step back a bit and try to understand what these integrated energy companies are now trying to do, they are also trying to address the energy transition by decarbonizing their portfolio. So we can go into, there's various ways that they can do it, and I'm sure this will a lot of come out, but ultimately investing into biogas is one of the aspects of decarbonizing their portfolio, moving away from oil and gas and into some of the newer low-carbon energy.
Yeah, very interesting. And it is sort of a relatively recent transition into biogas. One of the things that we sort of think about internally is, well, there's gas and biogas, and do the skills that the oil industry majors have in terms of their internal expertise, can they readily be transitioned over to biogas? They're obviously much smaller operations. There is some commonality in skill sets, but it's quite interesting that, as you say, that all these are acquisitions of companies that operate biogas or develop and operate biogas plants themselves, and so it's an acquisition at this point, so they own the shares. But do you think that this is a way for them to they will just simply put money into these companies that they've acquired, or do you think they will, in addition, build up their skills and perhaps transfer teams from the fossil side into the biogas side?
Quite, yeah. So again, if you take a look at the strategies of the big oil or legacy oil, now major integrated energy companies, their strategy is very much, from our perspective, they are part of the solution to the energy transition. So if you maybe dial back the conversation, the debates that we're having 10 years ago, it was all about choking off the supply, the oil and the gas, and therefore, we delivered the energy transition. But unfortunately, I think the events that we saw with the energy crisis in Europe, we now realize choking off the supply is not the way to decarbonize the energy system. And so the energy system must work together in order to decarbonize supply, but also decarbonize demand. So what the energy companies actually bring to the table is actually their scale, their balance sheets, and also their customer relationships and their ability to deliver these and execute on those solutions. Big picture, we can take some of these ideas in turn about how they can actually do it, but ultimately, that's what a big major energy company can bring to a, from their perspective, quite a nascent technology is in biogas, right? So I know, a fellow earlier this, this morning said, the first Biogas Congress happened 16 years ago. And, for a lot of people in this room who've been working in the industry for, this has been around for a long time. But really, from an investor's perspective, the term biogas, biomethane, renewable natural gas, this is all just now starting to circulate in the investment community and starting to raise a lot of kind of attention and go, well, actually, could this be the next big thing in climate tech, that's scalable and can help to deliver this? And, I think having the big energy companies come in and professionalizing a lot of it, we heard from some of the, benefits that they'll bring to the table include some of the engineering capability. How do you, the oil and gas companies were notorious in terms of, in the 80s and the 90s, so for finding some of the, developing some of the most challenging oil and gas operations. There's a potential for them to bring this to biogas. How do you increase the yield of a anaerobic digester? How do you take all those data points? They're very good at collecting data as well, as we saw in the previous panel as well. Again, it's a very data-intensive industry. How do they take that data and work it so that they can improve the yield and the profitability ultimately of that molecule to make it more profitable for investors as well, right? It all comes down to delivering that value add to the investor. Second point, where they come in, their balance sheets, right? They have some fairly profitable oil and gas operations. It's earning a good free cash flow for the company. Whilst they are remunerating shareholders as well, they are also diverting some of that capex into low carbon energy. So very broad numbers, the European integrated energy companies are directing roughly 30% of their capex plans into low carbon energy, of which part of it will go to biogas, some of it will go to hydrogen, some of it will go to carbon capture as well. But it is definitely one of the technologies that they're looking at and to investing more, and they're going to put more into it.
That's fascinating. And one of the things that's always been, that we talked about earlier, that's a real challenge for the biogas industry, but it has been the economics and the pricing that you put on the various benefits that biogas delivers. Mm-hmm. In order for the pricing to be right, in particular carbon, that does have a massive impact on their other investments on the more fossil side. Mm-hmm. So, and there's obviously therefore an impact potentially on obviously a potential impact on shareholders, and big companies are ultimately answerable to shareholders. Mm-hmm. So how do you think that they are marrying up their sort of the need for the pricing for all of biogas's outputs to be right, to make the economic model stack up, with the fact that that will therefore have a negative impact on the pricing for the fossil side? Yeah.
I don't see it as positive and negative for each other. I think if we just look at the merits, firstly, on biogas itself, historically in Europe, natural gas was being priced at roughly $4 an MMBTU. In the US, Henry Hub gas is roughly at $2 an MMBTU. But we also saw over the last 18 months or so, there's been a lot more volatility. We've seen European natural gas prices spike up to $75 per MMBTU, and also the risk of that domestic supply, that foreign supply that was coming in was being disrupted. So suddenly, we're now looking at, well, actually, if we look at biogas, which, I've seen quotes of between $8 to $20 an MMBTU for biogas, didn't start to look a little bit more attractive relative to, what is an unknown and very volatile future for example, European gas. So I think if we just even start first with understanding the cost curve as biogas scales up and, we start to fall down the cost curve, it's not that kind of dynamic of saying that biogas is, historically less economic to natural gas is not going to hold forever. Something's got to give over time. So it's important that, we have summits like this and we see a lot of the technological improvements and the impetus and also the government subsidies to make sure that the cost of producing biogas continues to fall. So on its own two legs, it is competitive over a long period of time, that we get to a point that is competitive to natural gas. The second point you bring on then is carbon, right? So that's an externality of the cost of doing business. And actually that kind of, I'd like to tie that to some of the comments that, we've heard from the big major energy companies is not only do they want to be an operator of biogas, the reason they do so is because they're trying to help their clients decarbonize, because their clients are facing a carbon cost. In Europe, we're seeing $80 a ton, which can go up to $100 per ton for CO2, as widely reported. But ultimately, these energy companies have clients to answer to, and they're looking to their energy provider to go, well, if we are in a difficult to abate industry, that there's no obvious solution to reducing our CO2, what else can you do? So we're starting to see biogas, firstly, being applied to some fairly niche areas, such as last mile transport, where you see companies and fleet operators, such as post office, delivery companies, or grocery delivery companies starting to run their vehicles on biogas, for example. Now that's a very niche technology that if they already have the relationship with the major energy company, they go, well, we're not going to deliver you, petrol, but could it be vehicles run on biogas, like our biogas? So going back, so there's kind of that economics of biogas really starts, you have to attack it from both fronts. One of it is to make sure the cost of producing it continues to fall. And the second one is to find demands and applications, end users that can afford to pay a higher price, because it's not just about the molecule, but there's a branding element to that molecule to give it more intrinsic value than just replacing a CH4 molecule.
Yeah, I mean, the pricing question is really, really interesting, because I know we talk about the need for biogas to be comparable with gas and stand on its own 2 feet. But that's a really odd statement in many ways, given what we've talked about in terms of carbon. Why should biogas stand on its own 2 feet in terms of price, when it's not having any impact on the climate, whereas the fossil gas is? But either way, it certainly benefits the biogas industry to reduce its cost, and so there are certainly areas within the whole biogas process where research and innovation would really make a big difference to the rapidity with which digestion can take place, etc., and costs can come down. Do you think that the oil majors can have quite a significant impact in terms of putting more funding into R&D to therefore help with that cost curve? Is that something that they would see strategically as a way of approaching that?
Yeah. To build on your point about the benefits of biogas, and if we were to factor in a carbon cost, then we understand, like, if you want to level up, levelize costs, then you can see why we can start to get to that point quickly. Unfortunately, we still don't have a global carbon price yet, which is is one of another things that I think the associations will work on to get some agreement on. But going back to kind of the topic here, which is big oil's role in the energy transition, absolutely is in that R&D. Not only are the big oil companies, or let's call them integrated energy companies here on this platform, not only are they investing their R&D, they can also leverage their trading capabilities as well, to optimize where that green molecule or that, lower CO2 intensity, gas molecule can go. Some people say like low carbon gas sounds almost like an oxymoron. Well, actually, it's not, because, I think, in the previous panel, there was a little bit of discussion about certification of natural gas. And how do you certify that gas is a little bit lower carbon than the other one? So that all needs to come together. Now, going back to the energy companies, what are they doing? Not only are they investing in either being an operator themselves, but because they're doing that, their service companies, their supply chain is going to follow suit. Because if you're thinking about the Scope 1 and Scope 2 emission reductions, they have to look at their supply chain. So we're now seeing some of these, typically like the service companies that provide kind of solutions to the major companies, they're also converting some of their staff into, finding more solutions for farming and agriculture to improve yields for crops, or yields for turning manure into gas, which always gets a chuckle out of my kids when I talk about it. It's fascinating. But they're using microbes, for example, to improve the yields. So not only because the supply chain is seeing the major energy industry invest into this, you're also seeing the supply chain continue to devote their resources into that R&D as well. So you're actually going to see a multiplier effect into this technology.
Which is great. It's obviously what we want to see. You highlighted the other day when we were talking that at the moment Shell is not including their Scope 3 emissions in until 2050. Mm-hmm. What do you think is behind that?
So we can, bottom line, there's a big debate about Scope 3 emissions. Ultimately, if everybody in the room or every single corporation addressed their own Scope 1, 2 emissions, we wouldn't need the energy companies to address the Scope 3 emissions. So I think that's a very important starting point to think about Scope 3. They have pledged, most of the European integrated energy companies have pledged to reduce Scope 3 emissions to zero by 2050. But the companies are at various stages of introducing interim targets in 2025, 2030, in terms of like what that milestone could be. Is it 15, is it 25, is it 30? What's the right number for an interim target? We just don't know yet. But to your point, Shell only has a 2050 Scope 3 reduction, a target in 2050, not an interim one. But if you go across the pond into looking at Chevron and Exxon, they don't actually even have a Scope 3 reduction for 2050 at all. So, I mean, there's a lot of debate of who it belongs to. But what's really interesting is the strategies of the energy majors as a whole. So I want to put this number out there. When I look at what the major energy companies are doing this decade, for example, if you look at the change in portfolios that they've all communicated, and the change in their own operations, such as electrifying their own operations, addressing their own Scope 1 emissions, also introducing biofuels, SAF, biogas, into their product slate. They're also going to invest in hydrogen. They're also investing in carbon capture, natural sinks. If you take all those plans together, the European major integrated energy companies are reducing the CO2 intensity of their portfolio by about 20% this decade. So just for some of the numbers people out there, that's the grams of CO2 they're producing per megajoule of energy that they sell. That number is going down by 20% in this decade. Now, if you take the IEA's net zero scenario and you were to look at the globally, what humans as a race that we're doing right now, we're actually only on track to reduce our CO2 intensity by 9% this decade. So if you compare the numbers, the major energy companies have the scale and the expertise to deliver a faster reduction in CO2 intensity than the wider population is. So I'd like to say that they're actually, and that's one of the reasons I can look at them and say they are actually part of the solution, because they have the understanding of the energy systems to deliver that accelerated reduction. Now, I do follow these companies very, very closely, and therefore I can get to that answer. But I'm not sure that that is, popular opinion at the moment, right? So hopefully no one cancels me out in this cancel culture that I've said something. But my point is, it's actually not a very well publicized, and it's not just a publication. It's actually numbers that we've sat down with my team to look at, the oil and gas and the biofuels mix, what that can ultimately deliver. So I think that's quite important. So, maybe perhaps a longer answer to the question, which is you were just trying to understand, is what are they doing and how meaningful it is. I think it is actually quite a meaningful step. So that is a Scope 3 number that they are looking to reduce, but it's just that they don't just have a hard target to say what it is going to be, because Scope 3 ultimately depends on the demand of the customer. If you and I, maybe me, sorry, I still have a petrol car because it's quite new actually, so I don't want to switch it out yet to an EV yet. But if the customer, if the end user is not switching out their demand yet to lower carbon energy, it doesn't matter what these companies are trying to do to reduce Scope 3 because the end user customer has not done it yet.
Yeah, I mean, it's certainly the case that we've all got to play our part. I think, I mean, at the end of the day, what matters is how much new carbon is going into the atmosphere. So no matter how fast anybody's decarbonising, it's that number that is really massive.
40 gigatons of CO2.
We cannot expand beyond that number. But I think it is absolutely the case that the more these large-scale companies that can move into biogas and help scale up the industry and drive it, has to be a really good thing.
Yeah.
So what do you think might be the challenges to them doing that? Because it's, they currently operate quite big, infrastructure, oil, whatever. There's a completely different scale. So what do you think might be difficult to achieve that?
Sure. And it's a question that I've been getting a lot from investors as well, particularly after the announcements of the Archaea Energy and the Nature Energy acquisitions. It's, first and foremost, I think it's scalability. And we can talk about a few things. There's government policy, there's funding. But if we just even talk about scalability first, oil and gas became the predominant primary energy consumption for post-World War, for humanity, because of how the energy density, the mobility of it, and the scalability of it. So they can go into somewhere, subsurface, below the ocean in Brazil or West Africa and find, oh, we've just found 3 TCF of gas. Or, oh, we've just found an oil field that when it comes online, it will develop, it will deliver 300,000 barrels per day of oil to the world, right? And from that point on, we saw oil rise to 100 million barrels per day. I think with the challenge with understanding biogas, and as I've been reading more into this technology as well, is we're not suddenly going to find a landfill or a pile of cow dung that's much larger than it is, which is probably what I think investors are trying to understand. We're trying to grapple with, well, yes, we understand, that's probably not, to be one of the kind of surprises we find is oh, there's suddenly much more landfills to go into and to turn into gas. Now, so that's probably one of the bigger issues is scalability. And the second one is funding, and that was probably, part of, the opening keynote this morning, which talked a lot about subsidies and how do we join up subsidies, private funding, and the companies. So ultimately, at the heart of my job, I'm still a broker, and but what I try to do is take some of this industry information and demystify some of the companies out there. Here are the companies that need the funding, and here are the investors that have the money. There's a bit of money here from governments. And there's and here's some from debt markets and equity markets, and how do we get a more efficient market going so there's not that information asymmetry happening that's holding back investment. So I think those were the two things, scalability and funding is probably comes to the top of the list in terms of how to some of the challenges that biogas faces.
Yeah, we had a good chat the other day about language and the fact that to anybody outside our industry, there's a lot of language that words that we use in our industry that if you from outside, it's a bit of a mystery. So three-letter acronyms abound in our industry. So there's definitely some basic education that can be done just to get people, everybody familiar with the terms that we use. I was also interested, you made me, when you talked about sort of the challenges that oil majors have sort of coming into the sector, made me think of GASM, which is the Finnish operator, I think, gas operator, who had to, as you say, had to learn from how they could supply gas that came out of the ground, etc., and then start generating it from waste. So they ended up having to learn. I don't know if you've got anybody from GASM in the room. Well, I went to visit GASM a few years ago and talked to the chief executive, who talked about the fact that she had to learn to be a waste collection operator because she had to go and learn how to go and find the organic waste. So they basically learned how to go and collect organic waste from homes and businesses to supply the feedstock. And then they had to go and learn how to be an AD operator, and then they had to go and learn how to supply that to customers in a different way. So they effectively had to learn how to do three businesses differently. So I don't know whether that's sort of something the oil majors are similarly going to have to do. I imagine we do have representatives from the oil industry in the room. So I don't know, is anybody who's brave enough to say, yes, I'm from an oil major, and hopefully you're on the green side, which would be great because we want you to be helping us. And what are your challenges? Does anybody want to tell us, and how can we help? Anybody brave enough?
I may even just want to jump in on that, just drawing on some of my own experience. I think what you're referring to is infrastructure, right? Is also another kind of hurdle to how do we, you're learning to do something new, which is that last mile collection, which is why Archaea, for example, BP was very vocal why it was an attractive target for them, because they already had the pipeline locked in for additional sites that they can bring on to develop more. So that was very interesting. If you looked at the near term valuation they were paying for producing gas, it was over $650 million per barrel of oil, thousands of barrels of oil equivalent, KBOE. So for oil people in the room, that was the valuation if you were looking at current day what Archaea was producing. But once you projected that number out to like 5 years later, and all the pipeline, came up, that number quickly fell to below $200 million per KBOE per day of production because they had that visibility. So that's quite interesting. Is to deliver that pipeline of growth, to an operator. But what I also learned is I was at a carbon capture conference, just to kind of give it an idea. Another clean tech industry event that I went to, and someone put up a schematic for carbon capture. So instead of taking the carbon out, they were putting the carbon in. And I'm like, that looks awfully like a gas sweetening schematic, but then this had a few things tweaked for it to be like a carbon capture system. And that therein lies the trick of actually there's a lot of overlap in the oil and gas industry and into kind of wider engineering, production, and tweaks. Turn a substitutory valve the other way around and you're suddenly putting the carbon in. A lot of the other systems, for example, an industry that I looked into for a very long time is seismic. Historically, they shot a lot of seismic to understand how petroleum, oil reservoirs, gas reservoirs were moving over time, so they can determine where they were going to put the wells for the best optimal production out of their wells. But actually, if you take that technology, that can turn into permanent monitoring for carbon capture and keeping that carbon down in the ground.
Yeah.
Right. So again, it's another example of how the oil and gas industry can leverage some of the existing technology. Let's not remake the wheel. Like you say, we only have 6.5 years to meet that 2030, 2050 is around the corner as well, if you kind of think in the grand scheme of things. So let's leverage some of the existing technology that we already have and know-how and see what we can do for some really quick wins. Definitely.
Now, we've been chatting for a nice time. It's been great. Do we have some questions? One over there, Gabriel.
Hi, I'm Gabriel from the Brazilian Biogas Association. And in addition to the several challenges you've spoken about, I see the business model of the integrated oil companies is one of the greatest reasons for their success. It's a business model that's been around for 150 years, which is the integration from well to wheel. And it's something we don't see, at least not in our experience in Brazil, the integration of all the supply chain within the biogas industry. So that could be a challenge in itself. Not only the scalability, but how to integrate all this, all the different businesses, as Charlotte mentioned, into one company. So how do you see this additional challenge for the oil companies?
I think what's interesting is if you look at some of the strategies of the major companies, what they've communicated is to also help their client decarbonize. So what I'll say there is, and this is like publicly available if you want to look at it, if you look at BP, what they said for Archaea Energy, for example, they're going to take that gas molecule and they were looking to integrate that into another transaction that they did just a month ago, which is a fueling station that they'll eventually be able to feed some of that biogas into the fueling station. And then also, from a trading perspective, they have a book of gas that they're going to want to trade. They don't care if that molecule is natural or if it's biogas, but they know which client is going to want to pay more for that molecule because it helps them decarbonize. So actually, I think we are starting to see inklings of that. Like we're starting to see the initiation of that. So just to put it into perspective, they bought Archaea Energy. They bought a company called Travel Centers Americas about a month ago. They announced that transaction. So my point is they are trying to bring that biogas ultimately to the end user. So if you have a long haul vehicle that can take compressed natural gas, for example, they can then direct that gas to that end user. So maybe that's but again, because of the nascence of this industry, we haven't seen that done on a big scale yet. But I think it is promising from that perspective, and that's why they got platforms, something like Archaea, something with a travel center that has 230 large sites on highways. Because, for example, while EVs is very good for decarbonizing passenger vehicles, we don't have a front runner yet for decarbonizing long haul travel yet. So maybe to answer your point, we are starting to see that from the integrated energy companies.
Yeah. Thanks. Keith.
Hello, everyone. Keith Simons, SH Energy. 2 years ago, I went to the American Fuel and Petroleum Manufacturers Conference in Texas, and I learned that the oil and gas lobby there hate the ethanol lobby, and the ethanol lobby hate the oil and gas lobby, and the only thing they both agree on is they hate electric vehicles the most. So I kept my profile very low, but I love my electric vehicle. Last week, I was at AFPM, and I learned that they now love renewables because they love the tax credits from the Inflation Reduction Act, which is now going to be driving an awful lot of decision making, whether it's carbon capture or incorporating low carbon intensity feedstocks into the products. My question is, however, to what extent are all of these tax credits going to be driving bad behaviour that, if you look at it, doesn't make sense? A bit like in Northern Ireland, they had the cash for ash legislation, which was a disaster for Northern Ireland and the industry. Are we going to see those problems in the future because of the, bad behaviour driven by the legislation and the incentives?
I don't know if you have a view on it. I can take a stab at it. So I think for, kind of first principles is, whenever there is a disruption like an energy transition, I think policy does always have to play a role. I mean, look at renewable power generation, solar and wind. You think of where they would be if they, in the initial stages, didn't get the help from policy. But now they are, particularly solar can wash its own face in terms of being an investment on its own. So I think that's important to get the energy transition going. I actually share your observation in terms of how they feel about renewable energy in the U.S. particularly. I was in Houston just 2 weeks ago myself for one of the largest, I was at CERAWeek, which historically was an oil and gas industry. And, this time around, going back, the amount of embrace they have for just energy as a whole, looking at, addressing the carbon problem as opposed to the fuel problem. It's very much, one of the key topics of the conference. So I think, your point about tax breaks and bad behavior, I'm probably not going to comment too much on tax loops and what people do. It always incentivizes a certain type of behavior. Policy sometimes has unintended consequences. But what I do want to say is the importance of it. And to your point on the IRA is, Credit Suisse is, we have been leading on this, actually, on both sides of the debate in terms of helping investors navigate it as well. Because we think US Inflation Reduction Act and the European Green Deal industrial policy, as it evolves, it's going to have enormous implications on corporate strategy and in industry implications, corporate strategy, how they allocate their capital, where they allocate their capital. It's going to be very significant. What the IRA does is, in our report says that because of the uncapped nature of those tax credits, we think it can unlock over $1.7 trillion of investments over a 10-year period. That is going to be very significant in terms of incentivizing more investment to address the climate change. And that's very important because prior to that, the US really didn't have anything to do that. So I think I would say that on the US side. On the European side, our report also looked at the fact that there was like $500 to $700 billion of money that was ready to be allocated under the Recovery and Resilience Plan, under Repower EU, under Fit for 55. And my point there is there was money there that was waiting to be allocated, right? Right? And it just wasn't there yet. So when they see this money going to the US now, they decided, well, we're going to reform as well, and we're going to have to look, we're going to borrow some of the best things that they can learn from the US system and potentially come up with a better system. So I think, there's a lot of good that's going to come out of this ultimately. But, for example, going back to that European Green Deal, I think we're going to need a better acronym. IRA, well, maybe,
No, it's not here.
Well, that's not great, but European GDIP, not very, snappy at all, so they need to work on a better acronym there. But $500 to $800 billion to be allocated, sustainable mobility, which is where the decarbonized transport, where biogas is going to play a huge role, biofuels will also play a huge role, is almost 20% of the allocation. Circular economy is another 20% that can, technology that can win that allocation to the EU Green Deal as well. So we're looking just to see a lot more acceleration in that to come through over the next few months. So perhaps not answering your question directly, but I think a lot of good can come out of it.
Thank you. And Amy, I very much enjoyed the talk we had earlier, and obviously you really know about the oil industry, so I have a really important question. There's an awful lot of hype going on and hundreds of lobbyists in our English Parliament pushing for hydrogen. If you compare hydrogen to biomethane, there's no comparison. I mean, biomethane is a much better fuel, it does good for the environment, it's natural, you don't have to break down molecules to do it, and it's 100% renewable. Furthermore, there is no climate change whatsoever. If you take biomethane or you take biogas from rotting material and you make it into biomethane and you run a vehicle on that, any carbon dioxide which comes out of that propulsion has been taken out of the air. So it's taken out of the air and it's put back in the air. And there are so many people in the oil industry who are denying that that happens. And we think that the oil industry is responsible for pushing hydrogen because they are sitting on trillions of dollars worth of natural gas around the world, and they think that they can sequester the carbon on that gas and use hydrogen, and that's why they're pushing it. But as a fuel, to me as an engineer, and I've been in this business all my life, makes no sense whatsoever. And I wanted to know what your take was of why the oil companies are pushing it. Is that correct?
Yeah. I think there's a lot of questions in there, actually, I would say, on hydrogen, like what's the use, like, you know, and incentives and whatnot. There clearly is also a big distinction between blue hydrogen and green hydrogen, for example. But going back to a bit of work that I did in terms of like my claim that I think the European major energy companies are, you know, reducing their CO2 intensity of their energy products sold by 20%. Included in that is a step for hydrogen as well. So they are also pushing for hydrogen. They're also pushing for double-digit market shares in green hydrogen as well. So I think where we are on the hydrogen cycle is right now, blue hydrogen is the predominant technology. Green hydrogen is something that they're looking at towards the end of this decade because, you know, what you also need for green hydrogen to happen is a lot of renewable capacity, and we cannot build enough renewable capacity just yet to feed all that green hydrogen that we were looking to. So I think it's something that is going to happen in parallel. Biomethane, I mean, I say methane, you say methane, you know, that's another, you know, but ultimately whatever it is, CH4, ultimately it is part of the solution. It's here and it's right now, but the scalability of it is, you know, not yet quite proven. I mean, I think you said there was a number that 1/3 of it could be bio. Some of the reports that I've looked at, some of the studies we've looked at, says it's only about 2 to 3% can go from natural gas into biogas. So, you know, I think a lot of kind of work needs to be done into understanding what that addressable market is in order for perhaps more large-scale investments. But I think right now, so far the consensus is it's quite a small market in terms of the feedstock, which is the limitation right now. Whereas, you know, hydrogen is very, you know, looking at kind of later towards this decade. So, you know, from our research perspective, both are equally important in terms of technologies. If I look at the steps that the major energy companies, biogas is reducing CO intensity by 1 or 2%. Hydrogen is also 1 or 2% of that step change that they're looking to deliver 20%. So for now, I wouldn't say that they're emphasizing one more than the other, actually. I mean, I would say they started with hydrogen a bit sooner because another thing to bring into this conversation is their own use of hydrogen. So for example, one of the biggest industries that is looking to reduce the CO2 intensity of their own hydrogen is going to be the refining industry. They're one of the largest users of hydrogen at the moment. But up until 5 years ago, all of it was just gray and increasingly blue hydrogen where they were sequestering the CO2. They would be the first call for green hydrogen to actually be produced. So a lot of the green hydrogen projects that they're investing on right now is just going into decarbonizing their own operations. And that's perhaps why you do hear a lot more about hydrogen. It's the first port of call for them is their internal consumption of hydrogen rather than, you know, making it an end market use, you know, in the initial stages. So green hydrogen for external for sale, for export, is actually going to be a post-2030 type kind of issue is the way I see it. Yeah. Thanks for your question.
Question over there.
Yeah. Hi, Amy. Hi, Charlotte. My name is Vinod Raj. I'm from India. The question is, you know, one of the folks mentioned the oil marketing company has the network in countries like India and other parts of the world. What is the vision or the support startups could get to build, you know, even a 5 or 10%, which connects to a point which you said you have a petrol car and, you know, you would change to an electric because you've not seen, it's like the chicken and the egg story, to give the confidence for people to say, okay, I can change to a bio-CNG. So I summarize the question once again. The support and the effects for supporting startups to become might be a big oil someday.
I mean, I'm sure, Charlotte, you probably are aware of some you know, ventures out there, but ultimately, I'm aware that most of the major energy companies have venture arms, for example. I mean, but ultimately for startups, I mean, I think one of your avenues for funding is going to be government, right? I mean, there's a lot of subsidies out there. Secondly, is you can look to other, private markets for funding. But ultimately, I'm in touch with myself, understanding incubators, angel networks, other types of startup, networks that would be looking, for, again, the next big thing in climate tech, right? So I don't know if that answers your question, but there's a lot of funding out there. You have to find like the right source that is directed at investors that have the risk appetite for your technology.
There's a lot of funding. There's no clear path to state that this is how, especially for startups. And I think that's important if you really want to make it big and increase the ecosystem and the conviction of 2030 to happen. So I'm requesting if there could be a path laid down for startups to encourage them to say that this is how you can incubate and move towards and align and become a professional CNG, bio-CNG organization. So I'm highlighting that because that's the ground reality. And we face that, as you said, generically, there are many, but there's a roadblock or certain challenges.
Yeah.
So I'm trying to highlight that to both.
I think it's a great statement, important statement at an event like this, right?
Well, absolutely. I mean, this is all about bringing stakeholders together and sort of trying to get people to connect who can help each other. Just specifically, oil companies. I used to be a judge, so I do know that the Shell has a number of competitions to foster new companies, innovative technologies that can help their business. So and they are it makes sense to foster innovation and attract new companies. So I see quite a lot of support that could be available there. And I think that's what collectively we all need to do, is to ensure that we are finding opportunities for new ideas to be brought into the marketplace.
Hundreds of startups. So I'm requesting if there could be a way towards incubating them, because that will increase the ecosystem and the conversions to happen for 2030. That's where.
Great. It was a great idea, and we will note that in terms of things that perhaps WBA can try to think about how it might do, and how else we might facilitate it. I know there are bigger companies. Keith, you foster a lot of innovation as well at SHV Energy, so the bigger companies have more resources to do that, but it's absolutely something that we need to do if we're going to stand a chance of meeting that target. Absolutely.
Good luck.
Yeah. Does anybody else have any observations they like to make, not just a question? Because it's been a very interesting discussion. There's one over here.
Thanks, Charlotte. Thank you, Amy. Mark Clayton from Cube and Aardvark. Just a quick observation about the sort of the big oils and the challenge they have. So if you took your figures, they produce a cubic meter of methane for about less than 0.2 of a cent, and we produce a cubic meter of methane if you're buying feedstocks in for about 44 pence. So it's a massive hill they've got to climb, and I think they've got obviously the balance sheet to do it, and research, and I think the elephant in the room is carbon and the evaluation of carbon, would be my observation.
Thanks, Mark. One over there, and then one over there. Two over here.
Thank you very much. Dominic from Cargill, so Farm to Fork agribusiness. One of the successes or main kind of drivers for success for the big oil majors seems to be their integration all the way from, well, the whole chain. In biogas, it seems they can achieve the integration from the biogas forwards, but I'm struggling on the feedstock aggregation side of things. That's not their core business, and that's one of the, well, complaints that I'm hearing from farmers, at least, on how they're tackling it. Do you see any ways they can solve that piece of the puzzle, the feedstock aggregation?
I know that issue came up when I was in India recently, that specifically that was a challenge. Farmers had woken up to the fact that their manures were suddenly rather valuable, and that was sort of having a bit of an impact on the economic model for building biogas plants. So, I mean, yeah, it is actually quite an issue. Do you want to answer it first? I mean, I think there's a regulatory issue there in the first place, that if the right regulations are put in place to put such that it makes that there's either an obligation or some incentive given to farmers to make their manures available, then that will have to that can work, or there can be an aggregation, an organisation that aggregates the collection of organic waste. Somewhere we are very ingenious people, so I think there is a solution. But you're right that it is a bit of a challenge at the moment. But I'm sure it's not insurmountable. Any additional thoughts?
I think what we've seen so far, for example, Archaea Energy, which was acquired by BP, also have a relationship with two of the largest waste management companies in the US already. I think one of them being Republic, and maybe the other, I'm going to hazard a guess, it may have been Waste Management, but I'm just off the top of my head, don't quote me on that one. But my point there is, I think to address that area where it's not their core competency, we understand that they will likely form ventures, and from a large garbage collection company, perhaps that it's much more attractive for them to be partnering with someone like a BP or partnering with someone like a Total in other countries. So I can see how, if you can industrialize that last mile collection and professionalize that piece, that whoever that party ends up being will want a counterparty that's probably equally prominent and also has resources as well. So that's what I think like, to your point, that is one of the scalability issues, if you want to put it that way. It's just not something that they're good at. It's very difficult to scale, but they recognize that as well. So we're starting to see some interesting kind of relationships form on areas of that value chain where it's not their core competency.
It's Andrew here from SLR Consulting. Well, we asked if there was Big Oil in the room. I've worked very closely with Big Oil as a consultant, and I worked to develop a concept design for a huge 100 million euros biomethane plant in Europe. And the biggest issue we faced with the Big Oil was indeed scalability, because we've mentioned carbon intensity here, we've mentioned waste feedstocks to get that, and it is indeed, if you want your major revenue stream is your carbon intensity, your carbon credits, you achieve that by having waste feedstocks. From an engineering perspective, those are the feedstocks with the lowest biogas yield, typically. So the main issue is, of course, scalability. How do you get millions of tons of cow manure, say, is 90% water? How do you get that to your plant financially feasibly? And then you can collect your carbon credits. So yeah, I would just add, it is absolutely scalability. How do you build a large scale whilst getting carbon credits? That's very difficult.
Thank you. Chris.
Thanks. Chris Huhn, Adbert. I'm absolutely delighted about the interest of Big Oil in biogas, so don't get me wrong about that. What I'm nervous about is this time different? And I don't know whether Amy's got a view on this, but there's obviously a lot of countervailing pressure on the chief executives of the big oil companies in Europe, because the valuations are so much higher in the US. So you've got ExxonMobil and Chevron trading on a share price to earnings ratio which is nearly double the P ratio for Shell and for BP and Eni and Total and so forth. So, are the pressures going to come, are the markets going to get this quickly enough? Or are we going to see the pressures on the C-suites basically saying, okay, we go back to what we know best, we go back to big oil, and we have been there before, I'm afraid. BP, for example, spent a lot of money in solar from 1980 through to selling out in 2012. We had the whole rebadging of Beyond Petroleum, and it all went out the window.
Definitely
right.
one for you.
I'll try to do it quickly. Sorry, I know we're out of time now, but broadly speaking, that valuation gap between U.S. and European major energy companies is actually the #1 question I get in investor meetings day in and day out. I think, first of all, it's not singular to the energy industry that the valuations of U.S. equities are higher than European equities. I mean, if you look at technology, internet, those types of companies also see a massive valuation gap between U.S. and Europe. But importantly, you know, what we've seen so far in Europe, though, is we have seen a change in the shareholder discussions. You know, we've commented before that that conversation with the investor is very different from the conversation I was having with 5 years ago. So I wouldn't say like valuations they're volatile, they're fluid. It's what it is right now. But you know, I do speak to investors that actually think like I would actually rather invest in a company that's future-proofing their portfolio 5 years from now than say, you know, just looking back at, you know, looking at the moment, because there are a lot of like long-term value-oriented investors that are looking for the best business model, more sustainable business model for the long term than just focusing on the profits right now. So that's the view generally out there. The conversations are quite different now versus 5 years ago. You know, and we understand the valuation gap, but you know, I think the conversation is progressing.
Great, thank you, Amy. Well, I think we can all reasonably conclude that if we're going to stand any chance of meeting our 2030 objectives, we absolutely need the oil majors and to be able to scale up as fast as possible and do everything we can to help them. So, but thank you very much for joining us and helping us have a very insightful conversation.
Thank you very much for inviting me, Charlotte. Thank you.
Thank you.